What is the priciest stock in your portfolio today? Is it Nestle 18,000 rupees or MRF 80,000 rupees? Do you know you can own a part of a stock whose price right now is around 3 crore 45 lakh rupees? This is possible through fractional investing available for US stocks. In today's video, we'll see why should you consider investing in US stocks? Does it make sense to take that risk? Let's start. The first and the simplest benefit is that US markets have performed better than the Indian markets in the recent times, which means higher return for the investors. In the 90s, when our economy was not doing so good, it was logical to expect that the US market will outperform us. Then, between 2002 to 2010, Sensex outperformed both the US indices, the Nasdaq and the S&P 500, on a 5-year rolling return basis. Since 2011, you can see both Nasdaq and S&P 500 have performed better than the Sensex. Even on a 15-year return basis, the US indices have performed better since 2019. But you need to understand that during times of stress in the US market, the Indian market performs better. For example, during the 2008 financial crisis. So this outperformance phase will be cyclical, and there is no way to tell with certainty that how long will this phase last. The second big advantage is from the dollar appreciation. This will be the game changer reason for investing in US stocks. You know, the value of rupee has always been declining against the US dollar. In March 2010, you had to pay 45 rupees to buy $1. And today you need to pay almost 80 rupees for that same $1. But how does it benefit the investors? Assume that you bought one share of a company on Nasdaq for $10 in 2010. And how much amount you paid? You paid $10, that is 45 into 10, 450 rupees. For simplicity purpose, let's assume that the stock price did not change at all and there was no earning from the stock value appreciation. And what will be the value of that stock today? That stock will still be worth $10, but in INR, the value will be $10 into 80 rupees, that is 800 rupees. So when you invest in the US stocks, you are not only investing in the stocks, you are also betting on the currency gain. In the long term, USD has always appreciated in terms of INR. So if you invest in the US stock market and the stock market does not move, even then if the INR is depreciating, you will get a positive return. Number 3, benefit from the geographical diversification. We talk a lot about diversification when it comes to investing. So what does diversification means? In the most basic sense, diversification means investing in various asset classes. For example, equity or debt or gold or crypto and others, so that your risk and exposure is reduced and balanced. For example, if the stock market is not doing so good, your portfolio will not fall all the way down if you have also invested in gold as a hedge for your portfolio. In the similar way, geographical diversification is also important. It basically means investing in companies that have operations in multiple countries so that the country risk is managed. Right now in India, there is a lot of option to diversify across asset class. However, the geographical diversification remains a challenge and the options are very few. In the US stock market, companies are listed from across the world. For example, Atlassian, a UK-based software company, and Grab, a Singapore-based transport company, and Alibaba from China are all listed in US. Even Indian companies like HDFC Bank, Infosys, Make My Trip are listed in US. So basically what I'm saying is the US stock market is more diverse and hence more resilient compared to India. According to a Goldman Sachs report, the S&P 500 companies get almost 29% of their revenue outside US, and the tech companies have almost 60% of their revenue coming from outside US. This is a huge chunk. And also, these days, electric vehicles, pharma research, artificial intelligence, cloud computing are the leading innovative sectors where everyone is placing big bets because these sectors have a chance to give exponential return. There are multiple companies across the world which are working on these sectors, and most of them are listed in the US. For example, Tesla and NIO for the electric vehicles. Number 4, US investing makes it easier for you to achieve your aspirational goals like traveling abroad or studies abroad. We have seen that the value of dollar has been increasing compared to Indian rupees. So, if your goal is to travel abroad or higher education, or if you want to settle abroad in the long term, you should consider investing in the US stocks so that you remove the currency risk from your investment gains. Let's take a simplified example. Suppose you are in 2017 and $1 is equal to 67 rupees. You need $75,000, that is 50 lakh rupees in 2022 after 5 years. If you are trying to come up with this amount by investing in India, you will need to invest 8 lakh rupees per year for 5 years to get 50 lakh rupees at the end of this tenure. But in 5 years' time, this 50 lakh rupees is worth only $68,000 in 2022, which means you are short by $7,000 or approx 5.5 lakh rupees. But if you had invested this amount in the US stocks, you would have achieved your target without any shortfall. You would have invested 8 lakh rupees every year, which would have been slightly different every year depending on the rate of the dollar. But by the end of 5th year, you would have gotten your $78,000. Number 5, ability to buy fractional shares. One important aspect of investing in US stocks is that you can buy fractional shares. What are fractional shares? Basically saying you can buy part of one share. This is currently not allowed in India. So for example, in India, if you want to buy MRF shares and you don't have 80,000 rupees, you cannot buy MRF shares. But in US, for example, if you want to buy the shares of Berkshire Hathaway, Warren Buffett's company, where the cost of each share is $428,000, almost 3 crore 42 lakh rupees, you can buy a part of this share as well. With fractional shares, you can even buy 0.01 shares, which basically means that investing in US stocks is feasible with a small amount as well. So you can keep buying in small quantities and slowly build your portfolio value so that you can keep gaining from these US listed companies. And number 6, now it is much easier and cost effective to buy US stocks from India. Earlier, when you wanted to invest in US stocks, you had to go through brokers like ICICI Securities and Kotak, which used to charge almost $5 for every transaction. But now with platforms like Vested and IND Money, you don't need to worry about these costs. Most of these platforms do not charge any brokerage on these transactions. The second way is to use the mutual fund route and invest in funds which invest in the US stocks. For example, Motilal Oswal Nasdaq 100 ETF. Recently, NSE IFSC has started offering access to some of the best US companies. However, this will incur a 0.12% transaction fees, that is 12 cents on every $100. To sum it up, there are multiple opportunities in the US market, and research and trends show that it is advisable to diversify your asset outside the country as well. There are multiple innovative companies listed in the US, and it makes sense to be a part of their growing journey. As a thumb rule, out of your total equity investment, you can consider 15% investments in the US market. I hope you now have a good understanding of why you should consider investing in the US market. And thank you for watching till the end. Do let me know in the comments below which US companies will you consider buying. And don't forget to collect your $10 when you start investing in the US market with the link mentioned in the description below. Wrapping it up, this is Paritosh signing off.